so far we can say that okay, price action on the daily chart still remains above the trend line. It still remains above the previous day, Friday closing session, but um, we aren't expecting it to really go up too much towards like the 430s until we get a good pullback on tech. So, the way the market works is when you have such consolidations, right? Like we can see this consolidation on tech as well. Let me get a better. There we go. This is Apple here. When you get this sort of consolidation, um, you're more than likely going to see a pullback because the market just isn't ready. It's just not prepared to push higher, and I think this would get a nice pullback, which does look like we may have a potential double bottom here. So, um, but yeah, I think even if we break this double top, um, we can go higher, team. I'm not saying we can't go higher. I think we can go higher, but don't expect the market to go higher from there, because I think if we do go higher, it's only going to be a bull trap to basically throw off bears and then flip everyone to become a bull where they FOMO and then everybody gets caught back holding and price action sells off big time. Does a healthy market correction and then goes back up in the future, and that's what we want. We want the market to come down, correct back down, and then later on in the future, we will look to see if we can buy the dip. I'm quickly going to go over the few stocks, and after that, our admins will take over. So, some of the stocks that I'm watching going into the rest of this week. Um, First, we have Meta. So just looking at Meta, the reason why I am bearish on this chart setup, or I am bearish short term, is because obviously we just broke out from the downtrend, okay? But we have been going from $88 here on Meta, 88 lows from back in not even October lows, you guys. Back in November 3rd, Meta was trading at $88. Fast forward to the prior week, on end of second week on April, Meta is trading at $221. This massive move up has not seen a proper pullback yet. So going into earnings, just like we saw Tesla earnings, being bad, just like how we saw Netflix earnings being mixed. If we can see Meta, or if we can see more mixed earnings, I think this is going to be a great signal for investors to understand that the market can just not go up higher anymore because tech is so overbought. So if we can get a solid pullback down to down to 180 area, fill these gaps down here, and then still maintain the bullish channel, we would basically, we would be having at least somewhat of a, I guess, healthy correction. Like personally, if it were up to me to just say it easily, I would say Meta would need to correct all the way back down to 153 before it has to go to further highs in the future. But we are going to just first target the 200, which is the gap here after this bearish rising wedge sell-off. You can see we have been scraping against the bullish channel. We did it here once, we did it here once, we did it here once, and it just failing. It's failing to push higher, you guys. What we need another retest like we did here. We did here. We need another healthy trend line retest at the support there, at the support of the channel, and then followed by further highs back up. So our first target is going to be 200 on Meta, and then our second target is going to be 181, which is the massive gap fill there. We do have another massive gap there, but we're going to expect some sort of spring bounce to come in around 180, where price action will push back up before seeing further downside, if anything. Another stock that we are bearish on is Nvidia. I mean, we talked about Nvidia seeing heavy supply here because this previous area was a supply here. This previous area on Nvidia was a supply, and we just haven't been able to pierce above it. We've had a really nice resistance here at 280, and so far we have been respecting that resistance line. So I think what will happen with Nvidia, we might see some sort of shakeout, fake out operation where it will go up, it will see another move higher, but I think that move will be followed with something like that where yes, it will move higher only to just come down, crazy on crazy scale all the way down, and pretty much retest these levels. Even if Nvidia doesn't come down to retest the 210 level, if we can just get this retest here at 230s, that's great enough at that gap fill there. So that's what I will be watching for Nvidia. And we can see, you guys, Nvidia is just too damn overbought. Is just price action is just so far away from the 200 SMA line after going all the way from from 140, and not even 140. If you really back up, this thing has been going from mid October lows at 108 all the way to 280. So even if if I zoom in right here on the daily chart, you can't even see the 200 SMA line. I'll have to really try to cover everything on my chart. So yeah, Nvidia right here has been in this distribution phase, and with earnings coming up, I think this is going to finally break down to the downside, come back down first, below 261, and then 241, taking out the demand candle. And once you take out the demand candle, you can have a nice flush down to 229 area, filling the gap there. And this would just be the start. So, team, what we mentioned, as you remember, we have discussed how trends change. Trends change when you have a higher high, higher low, higher high, higher low, higher high, and then higher low, higher high, and so forth, higher low, higher high. When you have this, right, and then you finally have equal lows, and then what do you see after equal lows? Then you start to see lower lows, and that's when the trend really starts to change the structure to higher lows and higher highs to lower lows and lower highs, which are a bearish characteristic, and that's when the trend will start going down. Nvidia has not cooled off. I mean, oh my gosh, look at the TTM squeeze, you guys. Nvidia has not cooled off in this entire time, so that's just insane, you guys. That's just absolutely insane. And that's why I think, that's why price action is behaving this way on Nvidia. It's just we are so far away from the 200 SMA line trading at 180 that price action is need of some cooling off before investors finally show up. So we have looked at Nvidia. So Meta and Nvidia are two of our biggest bearish positions. Anytime you see any sort of weakness, you go to these two stocks. And then we have Microsoft. And Microsoft is trading inside of this channel. So far hasn't really been doing much, but it is definitely very far away from the 200 SMA line. So what are you seeing with all of these tech stocks? You're seeing that they're way too overbought from their 200 SMA lines, and that they need to retest the 200 SMA lines and see, come back up, and then make further highs. Um, Again, we have discussed how the 200 SMA line works. You have pensions, you have institution, you have all sorts of firms, institutions, all of these big market participants that sell far away from the 200 SMA line, that unload positions far away from the 200 SMA line, and then buy back in once price action is closer, depending on whether it's in a downtrend or whether it's in an uptrend. So in this case, this is what's going on. So it is still in an uptrend, but definitely too far away from the 200 SMA line, and we should not be buying this. We should not be buying the upside comfortably with swing trades. We should be very careful and only day trade the upside momentum until it's gone, so that you're ready to buy back in, or you're ready to buy when there's a crash. I'm going to stop for now. I just wanted to bring Meta and Nvidia to our awareness in case the market goes up. I'll give it to our admins, Paul and Pantalones.
Because the stocks don't go straight up and they don't continue straight up forever. They'll eventually go down. All we have to do is be ready for it, and of course, look at the signals and things that are going to tell us when they're going to go down. So playing price action opposite direction of what you're holding is pretty normal, and it's actually a pretty good thing to do. That way, nobody's that fast. We can enter up, and either you do one or the other or both. But if you do both, they have to be at different locations in order for you to be able to play them correctly. And that just takes practice, by the way, too. Okay, so and then he was looking also at Meta, uh, Meta here, and I basically saw exactly what he was seeing, what he was saying. Uh, I enter Meta. Well, I've been playing bullish Meta since the 100s. When I saw that this right here, and then here it broke over the weekly resistance on the downtrend, and now it needs to basically retest it. And body's first target is the 220, 200, I believe, which is right there, right pretty close to where I have mine, below the 212. Even if it goes to 225, really, not 225, but 220, below 220, we can enter still and going down there like he's already in there, I think. And I think it can actually go even lower than that. But of course, we're going to be following price action in the other indicators. But I think it can actually retest the 190, which is right where the downtrend will be. And if you don't see a lot of price action there, this is 3-4 weeks down the road, it could still even retest the 176 and still be bullish. So those are just going to be basically opportunities to get longer. Of course, if it holds the MAC crossovers, and if we keep seeing the crossovers there too, which has a positive here buys on the monthly, that's a buy signal right there on the MAC. All it needs is the confirmation right there, which is going to be the pullback to the support levels, and we're going to have a trend reversal, basically confirmation. But that's going to take 3 to 4 weeks, maybe longer, 6 weeks. The market is going to be reacting to what traders are reacting, and information gets out there, and a lot of people, and that's going to just basically cause volatility. So it's not going to change direction. Volatility is meant to kick players out of positions in the long term. So that's why I like to play positions that I'm holding, because I don't just, I learn not to just take a loss and go somewhere else. I learn to hold stuff and continue to play them, no matter where they're going, if I already have a confirmation on other things. Which on this one, as you can see, it went as high as it could go, really, where it's not as obvious. I mean, it's still pretty obvious, but and now it can pull back and do that. And what body, everything body said was pretty much on point, obviously. Uh, Nvidia, Nvidia also needs that pullback that he was mentioning. Inverse head and shoulders broke out at the 180, around there, to the 200, and then the huge run all the way up there. Let's see if I have it does have the 3 white soldiers there, but overextended. So a pullback to the 250 is where I have where I have it here. I think I've done only the monthly on this one, so that would be probably too far. But yeah, 250 could still do it, because it will still be within the bullish candle there. That pullback. Let me see if I can do the 5 minute here. Let's see. So this. Yeah, and then if it doesn't show any strength there, it could even do 271. I mean, it is really overextended, but it does have the buy signal too. So this is just normal, confirmations, basically, is what they'll be doing, and we'll be playing them. And then we'll have a really good. I mean, we're gonna be doing really good on the way down, and I think we're gonna be doing even better on the way up, because it's gonna get really good. Of course, we're gonna have to do confirmations and everything technically at that time, and news and things like that. They can change, but the future looks pretty good. Let's see
I
what
agree
else.
100%, Rogelio.
Yeah, man, I'm really
I
getting
can't
your
wait,
excitement.
man. And I just tell our traders, if we can just hold on, if we can just, try to survive, even if you're not being profitable. Actually, this was our thoughts before, but now we're taking a day trade approach to kind of make up for that. So we
Mm.
really are hoping that we see more testimonials and more traders doing good, and not, like, we actually want to see traders doing good. If there are discords out there that have like this sort of percentage, we want to make it even higher and higher. We want to beat the odds, and we will go to the limits to beat the odds.
Yeah, you are right, man. It's so hard to find people like you, buddy. Because I met a lot of traders, and yeah, man, I like the your style and what you're doing for the traders here and everything you're sharing. You're definitely taking it a step above anyone that I've met. So that's why I joined it and I like it, and I'm really happy to be part of that. And to help the traders to actually be profitable, and not just throw them stuff or say we're this good, we're this that. I mean, it's really a small percentage of profitable traders, and the reason for most of it is because there's levels, to actually learning. And I don't mean this in a bad way. This is all positive, where you can get really good at technical analysis, but if your emotions, your mind, your whole really focus is not on profitability, just on basically having huge numbers, or you don't have an actual strategy. It takes time to perfect it, and it takes time. It's not even perfected. It just takes time to make it profitable. It takes time to uh, to control those emotions when you're trading. And believe me, once you understand technical, it does help a lot. It's obviously the next step, but after that, the next level is the emotional part. After that is the strategy part. After the technical side and learning all of that that's the part. But thankfully, you have really good administrators. They're helping you. Honestly, are helping you. They really are. They're giving you all the information they have. No secrets, nothing we're hiding. And it's like, no, I don't think I've met people that are like that, because there's very few traders that are really good at technicals that are actually profitable. That's the actual fact. And there's even less people that are not technical savvy and are not profitable. So it comes down to like 1 or 2% overall. But like I said, it is really, really, really helpful to be part of a team like this, because it took me years and years of pain. Every pain I've had has helped me move forward. Every time I've been destroy accounts, which over the years I did many of them. Cost me over six figures to become profitable, and it just never gave up. And I've seen so many. Most traders actually give up after 2 months, half after 6 months. 70% after a couple of years, 90% after five, 99% after six, and I've been doing it for 9. So thankfully, I made it, and it took a lot of pain. And I'm just so happy that the future looks so bright for us and for everyone that can follow and they can learn, and to be able to create people that can actually be profitable. It's just another thing that we're looking forward. Okay, so I'm not gonna get away from that because I'm also passionate about that. We're holding Amazon. I mean, Amazon is the only one that looks pretty bullish at this point. Of course, I haven't looked at Google that much yet,
So
but
true, man. I agree.
holding calls. Yep, we're holding calls on Amazon. June, I believe. I'll check him a little bit, and I have 10450 as support for this week, maybe Monday or anytime, which is where the 5 is. Let's see, here we go. That's what I use for a daily support. And then the 10 if they're right next to each other. If not, then it's going to the 10. But that 104 will be probably around the 104.50, 105 by next couple of days. But we are bullish on it. That's the other. So if we can hold the 102.50 overall, it'll continue. Because it'll take a couple of days to get there. Also, if hopefully if it does it slowly, of course. We do have a positive crossover on the Mac. We do have volume, RSI. Everything looks positive. If anything, it looks too good. So we can have a small pullback, to scare somebody off, shake somebody off, or just break out real quick. Like not even give anybody any time, because I have seen some posts of people that are just barely looking at it, getting interested in different groups, other ones in Amazon. So that's gonna be meaning that a lot of people are gonna try to start get entering there. Volatility is gonna spike, and but it's not going to scare us if we know what we're looking at, and if we're playing it on a daily basis too, not just holding swing, but we're also going to be playing price action, monthly, weekly, charted right there. Also looking bullish, as it can look. Really, there's nothing here that you can tell that it isn't, except for maybe the sentiment of too bullish so far in the next few days. So I'm looking forward to making some money there on Amazon in the next few days. Let's see. Another one, we look SPI. I haven't been playing SPI that much. haven't done that many alerts. The volatility on a 0 day to oxidation options, it's it can be really scary on a small account too. I want the account to be slightly bigger and maybe use 5% on those zero. For now, I'm gonna be using just the next day expiration on all my trades on a small account or even an SPI scalpings. I'm just gonna, if you want to do the zero, that's good. So basically, what happens with the zero is, you can make 50% on a move, where on the next day it could be maybe 35, 40% on the same move. That's not much difference. I mean, it could be 30 maybe, but still, that's still not much difference, and you're a little safer, because if it drops, you could have that 50% on the negative side and that 30% on the negative side. So the difference is just really up to you, but it's at least slightly safer. Even the volatility moves a little lower if you're 1 day after. And if you're all the way to Friday, even better. I mean, for Friday on a 50, maybe on a 50, 75, 0 day to expiration profit, you will be maybe around 15, on a Friday expiration if you do it on Monday. So what I'm trying to explain is, or meaning by that, is that it's it's not huge risk reward differences if you go just 1 or 2 days expiration, if you want to be slightly safer and if you don't want to risk too much and just grow your account slower. Zero are very attractive and they can make you within seconds if we can time it correctly, but it's both the other way. So even if we help you, and it just depends on how fast you are to react. So it really is up to you how fast you can react to it, and or to our alert, and to our, telling you that we're holding. Because if it's holding something really slowly, like Apple did on Friday, and I was really, really wanted it to break out to the upside, and after the longer it went, of course the confidence drops and drops, and then it did it. So it stayed in that range, which is why I feel that was a kind of like a closing confirmation for that week, that we're gonna hit lower, maybe push a little bit higher one time or a couple times, but then drop after that. SPI, you see this kind of a flag on the day, on the hourly, for a small bounce probably, which is why also Apple can do a small bounce early if it stays over the 412, or we can test the 410. Uh, and even after the 410, it can still bounce a little quicker, which is, I think, what's going to happen most likely. We're going to be chopping a little bit just to load up on volume, get to see where most people are going, and then we'll go the opposite way. Then it'll just bounce the opposite way wherever everyone is putting their money, and so that it'll be a breakout. Let's see, and but it's also obviously, if it doesn't break over the 415, which is where the last 416, I will say the 414. Probably we can move from the 414 to the 415, and then we have to basically break out of there and confirm. We'll catch this. These things, we usually don't miss them. If we're looking at them, we don't miss them. If you're looking at something, let us know too. If you can put my name on it or at me to catch my attention. Because sometimes I do get distracted and I'm not looking at all of them. I step away from the computer quite a lot, to be honest with you. I don't like, I can't be sitting down that much. I'm a pretty active person, so I just like to move around, which is why I have mostly tablets around. But I do use my computer, just not that much. So if I'm not looking at something, that's why I don't send up so many plays. I'm not as fast as Buddy when it comes to trading, scalping either. As far as sending it, I can only answer it. I mean, I literally type with one finger when I'm sending alerts, so it takes me a good 1 to 2 minutes to actually send them, and I'm looking at it. So that's why I bear with me on that, because I'm not as a scalper. I just do it by myself real quickly. I just can't be that fast. That's all. But eventually, I will be better with my typing and do it like him. For now, the day trades. So my day trade entries, uh, them real quick. How to enter, how to benefit out of them better for the new traders that have joined. Uh, as soon as you get that signal for either one swing from me, you do have a few minutes to enter. what could happen most of the time is I send them during a breakout. So I've been watching it for a while. I'm trying to find the best entries, which is why sometimes they look like they're robotic. I send, once I've been looking at it for a little bit and see a good entry, I send it at a breakout. So it's probably going to be slightly higher than my middle recommendation. And sometimes, like Tesla, I mean, Tesla is pretty unique on that. Tesla will just continue higher, and it will pull back a little bit, of course, but it may not even pull back to the lowest, to the highest minimum that I said to buy it at. So that's really up to you. But if you were to enter over the high price, I wouldn't enter the regular position you had before. I would just enter a smaller one. I mean, it's better to do 40, $50 real quick, or 30 than nothing, right? And if it's moving price action and you're willing to risk 30, $40 real quick too, then you can make 30, $40. That's why I send it. But most of the time is going to pull back to that number, and then that's where you can enter. If it continues there in chops, that means a lot of people started loading up, and it basically kind of like the momentum slow down. It doesn't mean that it's going to change direction though. It just means that it's slowed down. To me, that's what it means, and that it's basically loading on what people are doing, consolidating, right? Then you may get a chance, just because of time decay, a chance to enter on the minimum price, or to add your other position at the minimum price, or to average down. But I would not average down at the minimum price, because it's just not that low. It's just not low enough. It won't average anything really. Uh, if it breaks the lower minimum price, you could exit, or you can exit at the stop loss that I'm going to add, which is not the minimum price, is right below the minimum price. But you can exit at any time you like. If you follow my plays, the most you can follow them, the more you get used to what a stock actually does, and it'll basically benefit you more, because you'll know when to get in and out. The number one thing for every trader is locking in profits, and that's the hardest. And the second hardest, it's actually that might be the first hardest, is stopping the losing trade, because it has been noted that 80% of traders sell their winning trades faster than their losing trades. So this is why you can have so many wins, and one loss can take it all. And that makes sense, because if 80% of traders are selling at 10% and 15%, but they're not selling the losing trade when it gets to 15, 10, 20, 30, then 40. And then, but it worked all the other times, this time, why is it not working? That's where you're averaging down, and adding more is going to destroy the account. So if you ever average down, because my plays, I do believe that it's going to go up higher than just a little bit. I do try to go with the trend. So I wait for a little. That's why I don't send that many, because if the trend is just choppy, this doesn't make any sense. That's why Body is good at scalping. He's the scalp, I mean, he's more than that, but I mean, he's expert on that, setting signals for that. I will follow those in and out, and I do. But as far as day trading with mine, you can hold a day trade and still be scalping the other ones, right? You can still be going in and out, and if that goes down, if you can be doing all of this with a paper account, by the way, so you don't get scared, because at the same time, you can be treating that paper account like a real account, but really treat it like a real account. Don't think it's a paper account and let it run to see how much you would have made. No, because that's not helping. What's helping you is treating it like if it's your real money, exiting at what you feel, that would be the best, or when we alert you, and then see why. Why did I exit there? What did happen? You will never get 100% of what you can get. We will never get all the juice you can get from the play, to either direction, and that's something that we have to. That's really what kind of messes with your mind unsubconsciously, with the emotions. Really, just saying it, I think, kind of stays with you. Say, oh, if I would have held, because that is going to speak to you without you even listening to you in the back of your mind in the future when you're in another play. If I held this one like I lost at the other one, this one's going to be so. You're doing math already on how much you're going to make. All of those things. And those things are emotions, believe it or not. Those things are affecting your ability to get in or out or something. So you have to be clear of all of those things. So that's what I mean by the next steps. If you're robotic, emotions, then that's kind of like good. that's how you can be the best trader you can be right there. Yeah, I'm not saying that everybody should be robotic, but at least when you're trading, you should try to get those things out, and just do it as a business. And you're doing your business, and you're making your money, and you're gonna make your other money on your other job or your other business. But if you see it like that, if you don't see it as a becoming millionaire opportunity all of a sudden. I mean, you will, if you consider it, of course, and we will, but it takes time. You seeing so many people winning gives you the false impression on Facebook that everyone always doing that, and a lot of people win, but consistency is really what matters, or never coming back, or coming back 6 months later, 3 months later, 1 month later, or just continue, or making that money and learning for the next 2 to 3 months, and then playing another play, making more. What I mean is that the more you trade without knowing, the more probability you have of losing it, and you will lose it. And 99% of people lose it. 95, 97, 95% of people are not profitable, and that 5% are not huge profitable. Only 1% of that are actual profitable, where it's actually a job, a business, is something that you can literally make money on. And even less than that, take it to another level. And the only ones that do that are the ones that are really obsessed at that. And I can tell you, Body is really obsessed with this trading, and so am so am I. Because the better you get, the more you get good at it, the more you really like it, of course, and the more you start seeing the profitabilities of it. And what helped me a lot with it has been my health, my working out, and that's kind of like my thing. And that helps me with my trading. Actually, it helps me stay healthy. It helps me stay focused. It helps me keep my goals on. Sorry for getting away, but I'm always from the stocks while I still have my screen out. But it's just I like to share the things that I've personally learned uh, through my trading career. But going back to SPI here on the hourly, on the daily, you can see here it is right there below the support. Oh no, right at top of the resistance. It went down one time on the support of the downtrend, which is the weekly, actually, right there, right there. Look at that. So just breaking it right there. So if you could just break it there real quick, that would be nice. And then maybe test the 400 and the 395. Of course, if it doesn't, then it'll go up to the 420. It could do that real quick first, maybe. It does have that. I mean, so right now it's just not, nothing is 100% clear. But what we do know is that we're gonna catch it, no matter where it goes. We're gonna catch it. We do have a good crossover here, so it looks like almost everything has a weekly crossover, positive one, and has a trend, but in need of a pullback. Like it needs one kind of just to give room to something. So probably first go real high up, not real fast up, and then real faster even that down to not make no, don't even have anybody to react. They already be like Batty said, everybody gonna be so bullish and FOMO. They'll be like, oh, this pullback is just buy more, and then same thing it does on the up, it's gonna do it on the down, and we'll be there to do it daily and weekly. Buddy, you still there?
So would it be all right if I jump in, actually?
Yes, sir.
All right, cool. Just a few things to keep in mind for next week. We have no economic data coming out on Monday, but on Tuesday at 10 a.m. Eastern Standard, you guys want to be just careful of your trade size positions, because we do have the consumer confidence report coming out. That can definitely move things. Later in the week, we've got a very big one on Thursday, April 27th, pre-market 8:30 a.m. We've got GDP for Q1. That's going to be very important. So definitely something to be keeping an eye on. We've got jobless claims and GDP at the same time, which is going to be kind of crazy. So we could expect some shenanigans and crazy things on Thursday. And then the last one, we've got PCE, core PCE, and the index, and all of that stuff is very important for the Fed. So I do think that inflation, the market's been moving away somewhat. I don't know how it does this. I don't really care. It seemed to move away from the inflation data being important, more so, recessionary fears. It's all a narrative that I don't tend to pay attention to. But if we do see dramatic moves, sometimes they can be a trap. So we'll be paying attention to that, especially if the news is really bad and the market goes up. We can look for short-term divergences on the 10-minute, the 30-minute, and just see, are they getting ready to, gap and crap, so to speak, as they do love to do. So that is the economic news. Any questions on that before I move on to one more chart and a few just guidelines? Sweet.
Thank you for that one, Paul.
Yep. So that's just a heads up. One chart I'm actually paying a lot of attention to right now is AMD. It can be a part of the chip stock larger index. So I want to be careful of this one. I do think that if Nvidia has a pullback, it could affect AMD. It's possible. Um, but with that being said, it's had a healthier pullback, a much healthier pullback than Nvidia, and we have a really good 9 count buy signal on the daily, which and some levels that I've gone ahead and charted out. This is a stock I'll be paying attention to. Also for the 110K challenge, it's the options that are more in the money for AMD will be they'll be much easier to
Cheaper
manage.
too. So true,
Yeah.
Paul. I agree with you 100%
So
on this, man.
I've been trying to find stocks that are in the $80 to $100 range so you can buy better in the money, 1 week out options and not have to freak out as much, because it's like 1/3 of your daily
Yeah.
trade quantity. So this is why AMD is very attractive to me right now. So just to take you through the chart, we had a 9 count buy signal. Technically, it really played out pretty much immediately short term, which is very, very common. So you saw basically on the 9 itself, the first 4 hours was a large sell off. The second 4 hours, it bought into it, pushed up. Then we had a gap up. So to trade this one well, if it's going to be pulling this shenanigans, this might actually be a legitimate swing for the 110K challenge, which I have not loved the idea of doing. But I'm more open to it on this one because of the price point. And this is a very clear level. You guys can see basically anywhere between 87.80 and where we're at right now should be pretty significant. What I'd like to see actually is a capitulation move down. I'd like to see a gap down, and I will probably buy. And then I'd like to see them come back and reclaim this level because I think it's going to happen. And if we see a move either to the bottom of this rising purple channel on the daily, which you can see there's been clearly capitulation moves out of it and then back into it. That would be a great signal. It would be a great signal because we would also be losing a bear channel, which would be a great kind of like trap. Because to lose a bull channel and a bear channel at the same time, very unlikely. Um, Now, I wouldn't want to go heavy on a position on this one, but the reason why I'm interested in it is because if you get the right option, worst case scenario, it's coming back to this level. Um, or it's just going to go sideways. And if it goes sideways, there's an argument to be made for it to basically just sell off, somewhere. You can get easy 15% returns on calls on this one. If it were to move from 88.50 from its current price point to $90, maybe 90 or $91, that's a slam dunk. That's an easy move with relatively low risk. You got the sideways consolidation. For it to break out and really kind of get going, so to speak, you really have to see a more meaningful break of the falling wedge. I don't really care about that. I'm not trying to catch a 1,000% move. I'm just looking for the consistency of these plays, and I think right now there's a pretty good setup for this one, purely based off the 9 counts on the daily. Um, the only thing that I'm paying attention to is that on the daily chart we had the lowest close again that we've seen in a while. So it closed lower than any of the prior closes. The last time we hit this level, it bounced off of it. So if we see this level become resistance, um, it's one of those positions where I probably wouldn't average into it real heavily because what can happen is if this is so weak and let's say we see that pullback with Nvidia and the chip index itself starts to have a bigger pullback, then all that means for is that this 9 almost certainly becomes a longer term target where it's going to come back and tag it, and maybe it's not for a little while. So there's short term plays, there's a longer play, and that's what I'm keeping my eye on this because if we get more consolidation and falling movement kind of into this falling wedge, and any lies to the downside, then it could easily have a gap up on the following day, back test a breakout of the falling wedge, and then get up and get going. So it's not one that you want to build a heavy position into immediately, but I will jump into it. I will probably jump into it market open because I think we can get some 15% moves a couple of times. All right, so that's AMD. And then just the last thing I have before I hand it over to Body is just on some personal notes. I've been personally I know some of you guys have been mentioning, hey, where are you at, Paul? I have a business as well on the side that I actually found a buyer for, and I'm getting ready to unload it. I've been just in this stage in life where I've been able to take on so many projects because I can, because I'm not working a full-time job. I can
I hope
basically
one of
do
those projects is us, Paul. I hope you invest into us, man.
that, that's correct. That's correct. This is one of
Yes.
the groups that this is one of the passion projects that I really love. And I've been decluttering all of the things that just don't fulfill me, or that take away from trading, because I also love teaching. Um, so when I'm teaching how to read nines with setups, and when especially when Body and I tag team some of these things, it's like usually those end up being slam dunk. So that's really fun. But I'm almost there on. I think I've probably got maybe another week or two worth of decluttering. I'm really trying to be more, um, you know, uh, present, but also just with kids and stuff. It's like it's been crazy. So I'm really looking forward to that. For those of you guys who joined off of my referral, because you're really excited. Just know I'm getting really close. All right. So and then the last thing I would say is I'm really excited to um, to go through some of my philosophies on why trading is so awesome. One of the benefits and how to manage profitability consistently, because every trader has the story of huge wins and huge losses. Last year, with the Amazon stock split, for those of you guys who remember this, between I think it was really just between like May to late June, I made almost $180,000 in like 3 or 4 weeks off of that. And I was so arrogant and cocky about it, let me tell you. And probably in 4 days, I remember losing maybe 90 to 100 of that. It was pretty humbling. When you trade big, you lose big. That's not the key to being consistently profitable. I've you can It's easy to make a lot of money. It's really hard to make money consistently day
So
in
well
day out.
said. So
And
well said, Paul.
so one of the things that I'm going to practice with you guys is more transparency on. I hit my goal for the day. So if I'm trading, it's going to be with either a 110K account, or it's going to be with my one of my brother's accounts that sometimes don't tell anyone that I do that, but I'll do that for them just so that they
I
can
do it.
they can do well. But
Yep.
I want to be more transparent because I can literally make my financial trading goal by like 9 a.m. And historically before the group it might or not 9 a.m. like 10 a.m. or something like that. And the rule is very simple: you hit your goal and you stop, because your goal as a trader is consistent profitability. And so if my goal on a day is like $2,000, that's a great day. One of the benefits of trading is if you hit your goal, then you're done with work early on the day. But it's also really fulfilling to do trading, and so I just want to be able to name that with you guys a little bit more, and that transparency, so that there can be more encouragement for y'all. So that's something I'll be working on over the next couple of weeks. Just going to get all that wrapped up. And then you guys will have me a lot more regularly. So thanks for bearing with me.
Awesome.
You're up, Body.
All right. Okay. So I would like to talk about SPY a bit more because I wanna I wanna make sure that we are also ready going into this week. Um, so what I'm basically looking at for SPY going into this week, especially this crazy earnings week, is I'll be watching this rising wedge formation. We still have room to narrow. We could narrow like all the way up to 418, and honestly, we could even break out. But something that I want to talk about, especially because we have been teaching it to our team members, is what are you seeing if you really look at this price action, team? What are you seeing here? This whole price action. I can go ahead and answer that too if you guys want to just save us time.
You got it, bro.
All right, so I'm gonna go ahead and answer what basically what this is. It's pretty much a rally, and then we have a base formation. Like yes, the base is going, the base is sort of trending, and that's perfectly fine. We still have a rally and then a base formation. And what do we watch for since we have a base formation taking place on SPY on the 4-hour time frame? And if we go, even if we go on the 30-minute time frame, we can still see that base very nicely. So what's going on is we have a rally and then we have a base, and whatever happens inside of this base, whether we break out to the upside or whether we break down, we're going to trade that side, knowing that momentum and basically supply and demand is going to be within that side. Whatever the momentum is going to be within that side. So that's what I will be watching for. And if we go on the 4-hour time frame, even if we go on the daily time frame, we can see it even better. So what I will be waiting for, if we lose this trend line on SPY, I'm going to continue to play the upside, right? And I'm going to be very, very cautious going into this week because I'm telling you guys, I'm expecting these gaps to be filled down here. I'm expecting these gaps to be filled down here and not even asking for a pullback down to 380. I'm just asking for a gap fill at the 200 SMA line, which will make it a healthy trend of a higher low structure followed by more upside. Even if we come down to 405, I would still expect some sort of bounce short term. But the main pullback after all of the earnings stuff would be nice at 395 area. As a buyer that is expecting the market to push up long term, that level is great to add size on tech or to basically get back in on tech if you're not. So again, what are we seeing? We're seeing a rally, and so far we are seeing a consolidation take place. And I will say this, okay? This could happen very likely as well. We could come up here, retest 418 area, and even go to like 419 area, kind of break out above the rising wedge, only to plateau back down really, really, really hard, break the support. This is the most important part, okay? Whatever happens, we're going to trade a short term. But what we are mostly interested in is if we lose this rising trend line here. If we lose this rising trend line here, we know that the base is broken. The horizontal base or whatever this is, however you want to call this, this trending base, this sideways action is going to trigger major imbalance to the downside because the trend has been lost on the support side. So going into earnings, this is going to be a very, very highly likely scenario. Even if we get a blow off the top, I am still willing to be very confident and short, not expecting a breakout to take place above 418. I just feel like the momentum is not going to be there for the market to do, because if you look at the big tech, they have been going from 123 all the way to 170. They just can't, they need to pull back at least with Apple down to 150, with Microsoft as well. If Microsoft can just get back down to anywhere between like I mean, even 275 is fine. Even like 260s is really fine. Before the next upside. But again, same thing with Microsoft. We have a rally and then we have a base, and we'll see what happens eventually. So I just want us to feel very confident and very at ease looking at what's going on with price action, because even on the bigger time frame, we got it on lockdown. We can clearly see what's going on. We're just waiting for the opportunity to come in, which is when one of the trend lines is broken. That's when you start to really feel momentum. And I'm telling you guys, based on experience, this is going to be played out really well. And if you guys remember, like we actually called this, we called out the negative SPY inverse in the weekly watch list before this happened, like before this massive move up happened. We called it here at 414, saying that we would get a rally on the negative SPY, which is the inverse of SPY towards, and by a rally that means SPY is gonna go down since it's an inverse. So SPY came down to, I should say, to 410, but the chart shows it going up, and that's the beauty of looking at negative SPY inverse, because like I said, and what was the reason why we got bullish on negative SPY inverse? That's because we saw the TTM squeeze just, really setting up over and over and over, and there were no highs being made on the actual SPY. Since price action didn't make any highs, you saw that hourly shorts, basically hourly squeeze fire, where SPY went from 414, 415 area all the way down to 410. So this is why I like to look at negative SPY. It just gives me such a great insight on price action, where I get to use my scripts and the things that I've studied over the years within that chart. And now we're back to SPY. This is what I'm watching, team. So, price action is still consolidating it. These circles that you see here, these oval shapes, are basically the gaps that are yet to be filled. So I'm not saying we will get a pullback down to, or we want a pullback down to 380. All I'm saying is, just a healthy correction back down from this massive advance, where buyers can step in anywhere between even towards the previous breakout at 399. That's perfectly fine. And before I blabber on too much, I'll make it really quick. The reason why this would make sense, you guys, is because if we continue to have more earnings that are going, that are mixed signals and that are going sideways, the market is going to want to correct, because it's not going to be able to maintain these high prices. And even if we get a pullback, if you look at the monthly time frame, even if we get a pullback, I mean, that's it. The S&P 500 is just ready. It will end up absorbing any sort of momentum within the monthly time frame. So, you could get a pullback. You could get a pullback. Let's say, how Apple earnings is on May 2nd. Apple, even if you get a earning starting May 2nd on that new monthly candle, and even if you get a pullback all the way down to 395, if bulls come in, like you guys remember when SPY went all the way down here, and even here we were like, no, you guys, we are not going to be bearish. We're not screaming it's going all the way down, because you have to wait until the candle closes. So what we may see is, like, we may see a huge flush down to 395, only for strong buyer absorption, where you're going to clearly see this massive. You see, we had this drop, sort of base on the shorter time frame, and then a massive imbalance, rally back up, consolidation. And what do you think is happening next? We are very likely getting ready to head all the way up towards 440s, whatever. But for now, we're not going to focus on that. For now, we're going to focus on price action, and the shorter term, not even the shorter term, the 4-hour and the daily tells us that we should be careful for a short-term correction from this massive advanced rally that has gone on, for quite some time, from 380 up to 320s. Anyone else, team? Anyone else have anything to?
Yeah, I'm getting ready to show it. I'm almost there.
Yes, sir. Hopefully, I was sharing my screen. Oh yeah, I was. Perfect.
Yeah, you were. wide variety of moving averages that I'll switch between. But basically, what's going on is in order. This is the pink is if you can see my mouse cursor, I'll just go down 450-day moving average, 500. Um, let's see here. This one is actually the six. No, this is the 550-day, the yellow one. This one right here is the 600-day. And then this one is the 700-day moving average. And then this one. So everything actually has been, believe it or not, it's been course correcting back up. Course correcting back up. So they got into this really crazy helix spiral that they spread and they broke out super hardcore to the upside. And they gave enough space to the upside that now all these very, very large moving averages, if we continue to consolidate back in this range, actually, really, basically, even over the next, really, all it would take is like the next 2 months, which I'm going to show the quarterly because for those of you who used to watch my videos on YouTube, that was one of the things that I had to stop doing. It was a lot of time, but now you get some insights because I've been tracking this. You can see right here, these are very high level and they're consolidating. The moving averages are pointing towards the middle of each other. And we're talking about potentially a pullback. And even a pullback and a sideways movement is actually probably going to have a negative effect on just the moving averages. So I'm not talking about the PE of the S&P 500. I'll leave all that to the investors and all that stuff. As to the moving averages themselves, though, they're becoming more consolidated, just like they were over here. And then once they get real consolidated, and as long as they don't basically cross over each other and they maintain their spread, which you can see they maintained their spread, then it was very healthy. But right now, some of the shorter term, anywhere between 300 days out and 550 days out, and 750 days out to the 300-day out spreads are essentially starting to press in like a giant, massive, super huge flag. And you can see probably the most clearly on the monthly chart. So if we see this continue to stretch out more than on the monthly chart, potentially very high level flag. And the last thing I just like to pay attention to is price movement possibilities based off of candlestick patterns on the quarterly, which I find fascinating. And this entire month has done basically squat, which is absolutely hilarious. But you would think with the very bullish 2 quarters we've had in a row of the S&P 500 closing much higher, that we would see highs over the prior quarter, and we haven't yet, which is interesting. But I dare I say that even if we do see highs on the weekly chart, and this is where I'll take my moving averages and put my guys back on. Here we go. That right now that we've been basically flagging on the weekly, and actually you can see that we're relatively broken out of whatever this pattern was here, trying to hold it. We have a potential, kind of spinning top doji, which can be indicative in the following week if we come over here and we don't make new highs, potentially of a reversal that would then need confirmation. But if it does not hold and then we see a move back, it probably is going to move really fast, is my guess, to the bottom of this flag that it has been flagging in for a really long time. And sometimes with these flags, you can see that when you got a false breakout to the upside, then they overcorrect and dump beneath the bottom, and that would be a problem. So just things to be watching for. You can see it consolidating here on the daily. It's still holding levels. Frankly, I actually, Body and Pennsylvania, I would love your guys' opinions on this, so we can kind of turn this into a dialogue if you want. But I don't even know if I'm really that bullish. I don't know if it would take away a pullback bias if we really made it above whatever this prior high was on the quarter. That would be 416.72. I think for me to be really impressed, because it's basically already been at that level, it would really need to get above this high over here to see it try and climb this candle some more. And really, what could happen is if we don't see a further movement here on the quarterly and it doesn't get above this one, but it kind of stays above this one, this high would be the 416.72. Then just based off those levels that I've already put on here, I feel like you could actually just see a potential um, reversal candle sitting up on the quarterly if we don't see follow through. So if we were to have a spinning top, I feel like that could be problematic for let's see here. This is so the next
I
6
think we
months.
can, like personally, from my opinion, Paul, looking at that price action on the quarterly, I think we could have like maybe two or even three more quarters of consolidation because what bulls in terms of like supply and demand formulas, right? What they already have is they already have two massive green candle imbalance, and so far, they can be consolidating for two to three more months inside of a nice range and still get a breakout to retest that massive supply candle there. You showing on the monthly at the 446 before seeing the next supply pressure or the next consolidation.
That's exactly what I'm thinking. I feel like if they really want to climb this one, they've got to get above this one. And so even if we see new highs above this month, I could see it moving quickly up here, but it's gonna be a problem in my opinion if it doesn't get above this one, because that's the only way it's gonna be able to climb this breakdown that up to 440, 450, whatever that is. Anyways, so this is the higher level stuff that I like to pay attention to. We're not getting any major signals on those time frames because of how choppy this is. We're not getting any major signals on SPY or triple Qs. There are, I believe, a few 13 count perfected 9 count signals that could set off on the 4-hour non-extended for triple Qs, which would not be surprising at all. So I'm watching that as well. And that's all I got.
How does everyone feel so far for tomorrow's price action? And Rogelio, are you there?
Yes, I'm here.
Okay, all yours.
All right. Tomorrow's. Let's see. Mhm. And the price section on which one? SPI? What Paul was talking about?
Yeah, how do you feel about the or do you have anything to add on this to this live
Yeah, I
session?
mean, his confirmation is good because there's levels of confirmation, and that's a better one. I'm a little riskier, so I take slightly more risk, and everybody has their own personal levels, So uh, I think we are bullish still over the 400. 395, even if it goes really low, strong low, but it could always pull back. So that's going to be like my, cutoff area if I'm going to be playing bullish, because that's where the 50 is, and it'll be within the next few weeks. It'll be close to the 200 also. We do have the mic crossover. We are at a level where like we could go either way. Like we're like right there in the middle of everything.
Yes,
So this
sir.
channel's going to every direction. So I mean, it is just extremely hard right now to be trading the market. It's actually harder than most times that I can remember because it's just so unpredictable. But the volatility in SPI didn't used to be like this before 2020. It used to be so much
By the way,
smoother.
Rogelio, I actually heard that. Excuse me. I actually heard that. I heard that the markets are going to be a lot less volatile, and I think that's what I mean by the, that basically also very well aligns with what I've been saying with the consolidation. Like if the volatility dies down here and the market is going to be much because we have already been through the hard times, and that's why I believe, like personally I believe, going into the next 4 months at least, the market is going to be very easy and very straightforwarded from there.
Okay, good. Is it over the 400 that you also like to stay bullish, or
Yes, sir. Matter of fact, I actually like uh, in my honest opinion, I feel very very confident looking at the current price action for SPY. Like things are looking very very clear. The only factor is time. Like the only real factor is time. And as you guys saw, even on the 30-minute, sorry, on the 30-second the other day, how even just 30 seconds threw us off, and we were on the wrong side of the trade. Now keep in mind, like I'm very careful going into the future not to get thrown off like that, because my mind did tell me ahead of time that I was making a risky, like I was making a risky decision, because I could easily get faked out here. So, but in terms of like the direction on the bigger time frame, I honest to God feel very confident, and I think it's just really going to take time for us to see it work out. Like we might see pullbacks, and even if we get pullbacks, like I've been saying, to 395, I think buyers are going to come in, and they'll end up like closing above, let's say, a 405 on a weekly candle, and that'll still give investors some very great optimism, because what you would see is like you would see a rally based consolidation being very well respected just above that massive supply candle on the weekly time frame. I forgot to share my screen. I'll share it really fast, but that's what I
you're right.
mean.
You're right about that, and also thinking about it. A lot of times I just lose my train of thought. But thinking about the basically the market in general, it's forward looking. Like it thinks at this point, even though a lot of things are like numbers are not coming in strong, and a lot of people have negative point views of the future, that we're going to go into a depression, all of things like that. I think the only thing that can cause things like that at this point will be another pandemic or something like in that area, major things like huge, because since they're looking at the forward future, they're, everything in the back is in the past, which is like the worst. Like everything closed down. We were basically, the world stopped and whatever. That's like the worst case scenario.
And
So
honest to
forward.
God, like even if that happens, Rogelio, I really feel very confident that we will be able to trade that price action very well, because as soon as we see that, we see that massive supply candle on the monthly or on the weekly that clearly stands out, I promise you guys, we will know exactly what's going on. Like I'm just so confident going forward in terms
Yeah.
of both sides. Like I'm not fully blindsided that that we won't have a quick crash like that. Just to kind of throw traders off, and then have the low volatility, continued upside move. Where traders will be scared and the market will just keep on going higher and higher. But or we could just do it here after some, like I said, the consolidation after a few months. But my point is, like, we really will be prepared. I just wanted to
Yeah.
say that.
Yeah, so that's that. I don't have no doubt about that. Like we could be thinking about things right now and be like, "Oh, they were wrong," but when it's actually happening, we'll be there. When it's actually happening, no matter what direction, we're gonna be there and we're gonna enter place.
Yes, sir.
And it may not be like the thousands of winners, like the hundreds, but it'll be winners for sure. So that's the whole point of it. Like Paul was saying, it's a business. It's about staying profitable. That's really what we're in, not in making the most, or becoming super rich all of a sudden. Because if that happens, without knowledge and without actually all the pains and things that you have to go through to actually get there, then it's not going to hold. You just won't be able to, you won't be able to hold, and the statistics are against everyone that does that. Just statistically, it's just so hard if you don't actually learn and practice and do that. Just winning all of a sudden and continuously winning on your own, it's not sustainable. Basically, it's just been proven over time and time again. And if you just research anything that has to do with that, it'll many different sources will let you know exactly what the actual statistics are. There's actually, they never done a scientific one, but I think I was reading at one that they did scientifically. But the whole point is that the reasons why a lot of people fail is mostly emotional. It almost has nothing to do with the technical side out of it. Almost in general, in general, most of the reasons are emotional reasons, like different types of emotions, though, like hopes and angry, or fear and things like that that go through the mind when things are going well and when things are going wrong. So
Yeah, I mean, it really doesn't matter to me what the market does, as long as I
yep,
know as long as I know what it's doing. I don't really care. I'm not an
yes,
investor. I'd cashed out my 401ks for business purposes,
hmm
and have been growing them on my own in a variety of ways. So it's like I don't really care. I just like to have a general a theory, and sometimes when I'm wrong, then it's like it is what it is. But
yep.
every
I
day
mean that's
the goal as a trader for me is just hit my target, cash out, see you later. And if that means I can go to the beach for the rest of the day in the middle of Indiana, and I promise you there are no cool beaches, but you get my point. That's fine with me.
w-
Um,
uh,
The one thing
yeah.
that's really bullish that I gotta point out. I forgot. I haven't been looking at this one. This is my very last thing. That is, and I do think it's a relatively big deal. Is that the 200-day moving average is pointing up, and it has been, and has not changed. It's continued. It's still maintaining a 45-degree angle. Um,
Mhm.
that's a big deal because literally at best it was going sideways for a while. And that movement on the 200 day is really everything, and every large scale corrective move. When you have the crashes and things like that. I'm trying to race over to 2008. Here you go. Check it out. When the 200 corrected here, that's the yellow
Mm.
line for what it's worth. This is 2008. You had some sideways movement, and then when you got that resumption of angle, is when it was really low volatility and just a grind and climb back up. But you can see how the 200 was pointing up. You had some sideways. Basically the market was spiraling. It loves to coil, built up pressure with an inverse head and shoulders, and then it got above the rest of them, and climbed over a larger period of time. And that has been for a long time. That 200 MA on these larger time frames, such as the daily, has been very indicative of when things are done. So as
Mhm.
long as we see the resumption of us above this 200, and the continued, bounce in an uptrend sort of fashion, then it can kind of consolidate sideways. But as long as it's above it and it's continuing in this direction, it can keep doing that because of the 200. So, anyways, that was my last thing.
Yeah, I don't remember the golden cross we had on the 50 and the 200 too.
Yeah, absolutely.
Yeah, a few weeks back.
It's my bedtime over here, y'all.
I know. Also,
Uh, Yeah,
11.
this is pretty much the end of the live session. We actually, we did a whole hour extra. So I was
Yep.
expecting us to do like 30 minutes just to give our members a good perspective. And honestly, the more we go on with these Sunday live sessions, I really can't wait because we're gonna come up with such creative ways to make this so much funner and so much more podcast-like, so that our members can also get a chance to talk. And we're going to talk about some very interesting stuff. We're going to talk about our watch lists. We're going to talk about stock requests that our team members can basically request us to analyze certain stocks and everything. So I'm really looking forward to this. This was our first one. Thank you all for being here.
Thank you.
Right on. Y'all take care.
Take care.
Take care, everyone.